Ian, welcome. While all this stuff has been going on in Europe, the Eurozone, and we've talked a lot, it seems to me, about retail sectors and banks and foreigners being interested in them in South Africa. We've talked resources a lot, we've talked financials, banks and so on. Haven't really talked much about property, and of course property, unlike some of these sectors and companies, it's real, it's there, it's on the ground, as it were. How has the sector been doing against this background?
Well, I think you need to split it up into various regions. If you look at and the markets probably bottomed long before the credit crisis. They topped long before the credit crisis in about March of 2007. In the lead up to the credit crisis, we'd already started to see a decline in property values and in the prices of listed property securities. That obviously accelerated, and a lot of industries were down as much as 80%. So property got hammered as a result of the credit crisis. Since then, in Asia and in the United States and in Canada for that matter, markets have recovered fully. So you've got back all of your losses. In Australia, in the UK and in Europe, where obviously there are still some deep-rooted problems, we're still a long way off the highs. So from a regional perspective, the US and Asia have done incredibly well over the last 3 or 4 years. Australia, Europe and the UK, not so good, and they still have problems, and I think they're still a long way away from getting back onto to where they were.
How do property investors think about their investment in property at times like this? Because platinum, they say, well, there's no demand in Europe, so therefore they're going to close mines for a while. If you want it long term, you must buy some shares now. Property's not like that. How do they think?
Well, I think that you're looking at a few issues that are driving the markets today. First is a quest for yield. If you are getting 1.6% in a 10-year US Treasury, but you can get 4 or 5% from a very solid real estate investment, investors are naturally leaning towards those real estate investments. Globally, we've seen big pension funds, sovereign wealth funds start to compete with your traditional property players for property assets. They want the long-term growing cash flows. The cash flows are reasonably solid. It would take a significant contraction in economic activity globally to lose the majority of your tenants. You don't want to be in equities then, certainly don't want to be in properties. So the quest for yield is important. The other thing that has been driving markets recently, I believe, is the fact that the cost of capital for a lot of these real estate companies is a lot lower than it was 3 or 4 years ago. Interest rates are lower. You've got other providers of capital coming to market. Insurance companies are now lending money to property developers and property investors, and they don't have the same constraints.
We were saying earlier that the money in Europe is a zero interest rate if you put it in the bank, so rather put it in property. David?
I think that if we look at the South African property sector, in this case, I'm not looking at direct property investment, but rather the listed vehicles. It's probably over the last decade or so, probably the best sector that you could have gone into.
Correct.
If you take the total return, it's been a significant performer. Where to from here? Because it just continues to go up and up and up. And it just doesn't tie in with an economic growth where we're seeing 2.7, or now it's being downgraded, or 2.9 downgraded to 2.7. Yet property just keeps attracting more and more money. And prices keep going. Well, when I say the property, the share prices keep going up. Share prices,
yeah. I think there's become a little bit of a mismatch between the prices of the securities today and the underlying prices of the property. So there is a little bit of a mismatch. But once again, it comes down to the fact that we've seen a significant decline in bond yields. Therefore, your competing high-yielding asset classes will re-rate or reprice as a result. So if the yield now on a 10-year government bond is below 7, well, there's no reason why you shouldn't get a similar yield from listed property where you're getting a growing income stream. Now, South Africa is a unique market from a growth perspective because unlike other property markets in the world, we have contractual rental escalations in our leases. So you're getting an inflation hedged income stream. With inflation at 6%, you're probably going to get somewhere between 6 and 8% per annum distribution growth or income growth over the next 5 years.
They still build those into the leases?
Yeah, very much so.
Why do we do that?
It's still endemic in our culture.
Look, I don't know the answer to that question. And
why do we do it, not the others?
Look, a lot of countries do have some sort of inflation-linked escalations, but often it's 65% of inflation, as is the case in Germany, and then only after inflation has increased by 10%, and that may take 8 or 9 years. But here in South Africa, because we have building cost inflation and our inflation has typically been a lot higher, we've tended to sign leases, and and as tenants, we're happy to sign leases that have these very high escalation rates. I mean, we're still seeing escalation rates of 10, 11, 12%, particularly in the retail sector. The smaller retailers are still being forced to pay these slightly higher escalation rates. So you've got an inflation hedged income stream, you've got a high initial yield. A lot of investors, particularly pension funds, retirement funds, are not paying any income tax or any taxes whatsoever. So there's no taxes paid by the vehicle, no taxes paid by the investment house or the fund. So everything looks a lot more rosy. For an individual investor, clearly it's not as attractive because you will pay 40% on that income. But the retirement funds are driving the prices.
I want to tell you something, because I thought that as well. And to my embarrassment, the clients that we've put into property trust and that have outperformed the equities, even taking into account the fact that they've paid tax on the return.
What about in the industry? I mean, 15 years ago there were relatively few opportunities. The sector expanded where you could get more listed opportunity. There's been consolidation. There's some big beasts now, which are
attracting all the foreign investors. And I think that's, in the last month or so, the majority of the performance, and it's been substantial. The listed property sector returned 7% in South Africa in June, and a lot of that was driven by very strong performances in Growthpoint and Redefine, Resilient, Hyprop and Capital, the big five. And most of the buying was being done by foreign investors who continue to look at how well our market has performed historically and in the most recent past. They also look at the high yields on offer relative to what they can get in their own domestic markets, but very importantly, they look at the growth that they can get here as well. And the growth, I think the market has taken a while to wake up to the fact that there is growth in these income streams, and you need to pay a premium for that growth over bonds. I've been talking quite a lot to the market about this in the last 3 months. I didn't expect it to happen so quickly.
What percent? You know, foreigners own our retailers. I think they virtually own in some cases
60-70%.
70% of are owned of foreigners. What's the percentage in growth? I mean, I know it might be a trick question.
Look, I mean, I'm not sure of the number today because clearly there has been a lot of new foreign investment into the sector, but it's probably not more than 10% across the entire sector. So it's still very small. One of the problems that we have here in South Africa is we don't have real estate investment trust legislation. So the tax status of our listed property companies is not properly regulated, not the loan stock companies anyway. Now, there's talk of an introduction of REIT legislation in South Africa, which would then encourage foreign investors who are familiar with that structure. They get the guarantee of the tax status of the investment, and I think in anticipation of that, now we've seen this once before in 2006 and 2007 when they first talked about the introduction of REIT legislation. We saw the property stocks do exactly the same thing. Once the REIT legislation story disappeared, obviously the yields went straight back up again. This time around, though, I think the Treasury, National Treasury, definitely wants to introduce REIT legislation, and the last I heard, it's coming next year.
So this growth is going to continue, is implicit in what you're saying. It sounds like the retailers and the banks, you know, high prices, but there's more to come.
Well, I think, certainly from my own perspective, I feel that if these prices do stay at these levels, so for example, Growthpoint stays at 23 Rand 50 or 23 Rand 75, wherever it closed today, there are a lot of other smaller and mid-sized listed property companies that are going to need to catch up, or Growthpoint's got to go the other way. So that's, for me, that's the opportunity, is in some of the smaller listed property companies. Sasfin listed one recently, Annuity, where you're still getting yields in excess of 9%. On Growthpoint, you're getting yields of just above 6%. So there's a 3% yield differential. Yes, clearly the portfolios are vastly different. Growthpoint has 400 plus stocks in the properties in the portfolio. It owns half of the V&A waterfront. It has some big assets, whereas Annuity doesn't quite have that many assets, but it does have decent quality assets that should grow their distributions or grow the income at a similar, maybe even better rate than what Growth Point is, therefore offering more opportunity for investors.
South Africa, there are reasons why minerals and energy investors don't want to come here, resources, they perceive problems. Are there any issues for foreign investors where they say, well, I'd love to go in, but there is that problem?
Liquidity. You know, if you go beyond our big 4 or 5 listed property companies, there's just not enough there for foreign investors to really get excited about. Hence, we probably will have these dual markets for a while. So foreigners will play in our large stocks and drive prices higher and probably drive them lower if they get nervous. So a much more volatile top tier with a lot less volatility in the bottom tier, which will be reserved for smaller South African investment managers, smaller South African pension funds, but offering much higher yields with the same growth opportunities.